Hey guys, I'm Eppes, and I'm joined here with Holly Clapp. Today we're talking about when enough is enough. So first of all, we want to go through like why is this important to think about right now? And when we say enough is enough, we really mean like when do I have enough in business value or I have enough built up where I am truly financially free? And so first thing is we're trying to figure out why that's important. So we'll go through that. We'll go through some common mistakes that people make when they're thinking about this, and then how to assess where you are in that timeline of financial freedom and what you should do to address it. Like, what does that mean based on where you are? And then lastly, thinking about maybe the human side of retirement, because we get our meaning from our work in a lot of ways. When we sell our company or we retire, we really kind of lose a piece of that. And so talking about how we can deal with that, I think is important as well. So Holly, thanks for joining us here today, and look forward to having this conversation.
Yeah, absolutely. I think this is a great topic, and it's one we talk about all the time with our business owner clients.
Yeah. So tell me what you think is important about this. Like, why should people think about this in the course of their everyday lives?
Well, a lot of the business owners that I work with will say, "Oh my gosh, I get calls all the time, every week from private equity firms and potential buyers." And yeah, there's some days I think, gosh, I would love to go do more fun things or spend time with my family, etc. Is it time for me to have that conversation? So it's really knowing if financially you are ready. And then also, if you get into a transaction, helping with the negotiation of that transaction, because if you know that value of your company is enough to support your financial freedom, then you're walking into that negotiation with a completely different mindset than you would if you're not sure. And then also, sometimes if people procrastinate figuring this out until they're contemplating selling or in the middle of a transaction, the deal may not go through because they may be surprised with the number, and perhaps they haven't really thought through, is this the right number for me and my family, my situation, and my finances? Studies show a lot of business owners sell their company and then they're unhappy afterward. And one of the reasons for that is they may feel like they left some money on the table that they shouldn't have.
Okay, interesting. So I want to get back to that why they're unhappy when we get more toward the human side. But anything else? Are there any other things that we need to know about? Like, why is this important to think about?
I think one reason is there's a lot of mistakes and assumptions that people make about financial independence. And one of the common ones I see is they think whatever their rate of return is on their portfolio
Mm.
is what they can spend. I mean, don't you see that some with your clients?
Oh, all the time, yeah. Or we hear the I'll live on the interest card and dividends kind of strategy as well. I think those are both like men on the street assumptions that we hear from time to time. But I've got some opinions on that. Why don't you tell me a little bit about kind of how you address that common misconception?
Yeah, I've had people come in with a spreadsheet and they'll say, yeah, I'm assuming I'm going to make 5% or 6% or 7% on my portfolio. And they'll show these withdrawals coming out of their portfolio based on the value of a potential sale. And what they are not understanding is that rates of return are variable. And what they've been used to is, oh, I can just put all my portfolio on the back burner and not think about it. And because I've got cash flow coming in and this is a future thing that I don't have to worry about. But that's a whole different scenario from all of a sudden this nest egg of money is your livelihood. And things go down and you're withdrawing money at the same time. And so withdrawing too much can put too much pressure on it and cause you to run out of money.
Okay.
So, and that's actually another reason, another why factor is the last thing we would want to see happen is for someone to outlive their money. We don't want their last breath to be after their money is gone.
Absolutely. And then but on the flip side, like I think a lot of times people are afraid to go talk to advisors because they think that they're just going to tell them, hey, invest all your money and you can't only spend this little bit or you're going to run out. And there's this fear of spending their own wealth. So I think the way I see our job is really to try to maximize enjoyment of that wealth over their life. Because a lot of times they do want to spend more when they're younger. So maybe right after the sale, and you may have your spending need may actually taper off because you kind of have these three phases in retirement where you're going really fast early on. There's kind of a common word called the go-go years. And then you've got the slow go years where you slow down. And then you've got the years where your spending actually kicks back up again later in life because of healthcare costs and things like that. I see our job as really trying to help people maximize the enjoyment of their wealth. So it's striking this balance. It's helping them understand the risk of a variable portfolio when they're taking withdrawals and how that's very different than when they're in the accumulation phase. And average rates of return are a better predictor. I want to use a math example here in a second to explain that a little bit. So the way to think about like why average rate of return is a flawed way to think about it when you're pulling money out is think about the scenario where you have $100 invested and you lose 50%. So now you have $50, okay? But then the next year you gain $50, or you have a 50% rate of return on that $50. You gain another 50%. So now your average rate of return both years was negative 50 and positive 50. So your average is zero. But how much money do you have? You only have $75. So people have this assumption that average return can tell you what's really happening, but it really can be misleading. When you think about pulling money from an investment account, you really have to think about how are the ups and downs of the market going to affect me. So, yeah.
Well, another common mistake I see, and it really ties in with some of the things you're talking about, is most business owners, their wealth is so much tied up in their business and they haven't spent a lot of time managing investments because they're spending all their time running their company and they may put most of their wealth back in the business versus taking it out and investing it. And so their investment experience relative to their overall net worth may be small. And so having all of a sudden a big check that they're going to invest could feel super scary. And so they could have some paralysis in their decision making after a sale. And so really understanding their numbers really well and working with somebody that can help them get comfortable with that ahead of time could really help them not have that deer in the headlights moment after a sale. They're going to need some hand holding potentially.
Yeah. So how would you address a situation? How would you address somebody who just had the sale and they are afraid and, you know, interest rate environment has gotten a little better than it's been over the last couple of decades. And so, I may be getting a little bit of interest at the bank on my cash on this big sum of money. And I may feel good about that. Like what's wrong with that? Why is that a flawed way of thinking?
Well, there's different types of risk. There's inflation risk, and inflation risk is just simply that the money that we have now is not going to be worth as much in the future. So investing in a way to address that is important. But there's a lot of different tools out there in the way we invest money that can help people address their comfort level with risk. And so it's just being a matter of being open and being able to collaborate with somebody that you trust so that they can help you design the right thing for you that makes sense.
Yeah, I think that makes all the sense in the world. So I think we've hit on a lot of withdrawal based problems, right? And trying to things that we navigate our clients through when thinking about how to draw income from a portfolio. So let's take, for example, now the person who they probably know they're not there, right? How do we assess where we are in that trajectory? Like what's the way we figure that out? And then then we'll kind of talk more about like what do we do about that?
The important thing is mailbox money and understanding that we've got to replace a paycheck once they're no longer drawing that out of their business. And maybe they've got a transition period of 2 or 3 years after they sell where they're still earning a salary because they stay on with the business for a while. But at some point, their portfolio is going to be their paycheck. And so it's figuring out what their lifestyle needs are and seeing if the lump sum of money is enough with a certain withdrawal rate to cover that. So let's say it is there, then they can explore different ways to sell the business if they feel like they're ready. But if they're not there, then they need to start thinking about strategies of how do I grow the business? How do I make the business worth more? Are there things that I can do to build the infrastructure or the sales or in some other way create value with that company so that it closes the gap? And, of course, we're going to add the value of the business as well as the value of any personal assets that they've accumulated and see what that gap number is.
Yeah, yeah. So, what are maybe some of the like? Because I think the easier may be the wrong word, but the simpler, more straightforward side of this equation is figuring out how much do I have in assets? How much is my company worth? Like, there's some exercises we can do to figure that out. I think it's a lot harder to do what you just said and figure out what your lifestyle needs are. I don't think very many people really understand how much they spend. And I think when you own a company, when you're the one that's kind of in control of the growth of that and the income, there's a tendency to kind of live the lifestyle that you want because you have control of both how much income you have to a degree. You can work harder and grow your company and get more income. So you have so much control over that. You're not used to that being a restraint, right? And
Right.
so,
And I used
yeah,
to that finite amount of money.
exactly. So that's a really hard thing to even assess. So what are some things that we could do to and then it gets even more complicated when you pay personal expenses through the company, right? Like now you're really
Yes.
confused because you've got stuff going through the business too, which is a very common thing we see. So how can we help people that are listening? How can we help them think maybe on a rule of thumb wise, like how can I wrap my head around that without doing the dreaded budgeting thing?
Well, there's a couple different things. I like the idea of figuring out what are those hardcore expenses I need to make sure are covered, and then what are the more lifestyle choices that we wanna make, whether it's travel or giving gifts to our kids or, spending money on the house, things like that that are discretionary. Um, Also, figuring out what our sources of income are relative to those things. We may have Social Security, maybe we have rental income, maybe we have some continued salary or income from the business as an employee, and then we have our portfolio income. So, trying to match all that together and see how it meshes. But as far as budgeting, I find, most people cringe when they think about trying to pull all their expenses together when we, right?
Yeah.
So, one thing we do to help people's there's some technology tools that we can suggest that'll help them gather that information more easily. Sometimes we'll just say, "Hey, let's look at credit card spending and see how much that ends up being," or we'll look at how much income they've been drawing out of the business from a paycheck standpoint, profit distributions, and then any spending they're doing inside the company for personal things, and we just add all that up and see what it looks like, and just see if everything is mapping together okay.
Yeah, that's great. So, and then you can kind of have an assessment on where you are toward financial freedom if you know how much you're spending and you know how much in assets or business value that you have an assessment. I know what I always I tell people I use this I call it a shortcut or like like simple math or just a very quick check on a rule of thumb on like where am I if you think about your net worth in terms of your spending and how those relate, you can just divide one against the other. You can take your spending or your net worth, excuse me, and you can divide it by your spending and you're going to get a number. And usually, if you're a 30 or above, you're what we would consider financially free, right? Because you have now 30 times your needs, 30 years worth of your needs. Now, everybody's a little different. That's just super rule of thumb. But that's a good way to think about it. So if you're a 10, you know you're not financially free, but at least you know where you are in the spectrum, right? And so it's just a cocktail napkin way you can use to assess that anybody sitting there listening can just put a pen on paper. I would just encourage you to be as honest as you possibly can about your spending. And I think that's the thing that we're really, really don't have a great handle on that. So having a way to really dig in and get the real number, I think is very important on the spending side.
I think that's a great formula that you shared to help people with a tool. We do have a simple little calculator we can share with people, if they want to message us or send us an email and ask us about that, we can send it to them and they can do a little self-assessment that might be helpful.
Oh yeah, that's a great example. A great way to start a conversation. So I think we hit on a great way to assess it. You got to get both sides of that equation and then figure out where you fit in that overall picture. And when I say both sides, I mean the spending and the assets. So let's talk a little bit. We may want to save it for another conversation and to give it its justice, but talk a little bit about maybe the psychological elements of retiring and maybe why that needs to be considered as well outside of just the pure numbers of it.
Yeah, so most people that are running businesses are very involved and it's a very busy season of life. And what they may not think about is what they're actually going to do with their time and energy after they sell their company. And so it's important to think about the emotional and psychological aspect of ending a chapter of our life that has gone on for quite a period of time and how satisfied we're going to be after that event. So, yeah, I think that would be a great next podcast for us would be to explore that deeper and talk a little bit more about what that looks like.
Absolutely. I think that there's a lot of things that are positives about that. You have time, you have the ability to do some of the things that maybe you didn't have to do, that you didn't have the capacity or time for. You have the money to do these things. And so there's a lot of upside there, but there's also, we get purpose from the work that we do. I think we're designed that way. And when that is no longer there, we have to find another purpose. I think that's a big indicator of that. So there's kind of some pluses and minuses to think about
Totally
with the
agree.
psychological aspect. So I think we'll hit on that in another conversation. Well, Holly, is there anything else you want to add before we wrap up today?
No, I think the only other piece is just figuring out what your company is worth. And that's another area that we like to give clients an opinion of value on their business, or we'll refer them to someone that will do an appraisal. Because if you don't know what that represents on your balance sheet, then it's hard to know what your gap is. And that's a harder number to figure out than just looking at investment statements and saying, okay, yesterday they were worth X amount.
Right,
But
right.
I think this is a great topic and I appreciate you facilitating a conversation about it. And I think that a lot of business owners could really benefit from this conversation.
Awesome. Well, yeah, no, I'm glad we had it and I look forward to talking to you again soon.
Okay.
All right.
Thanks.
Bye, Holly.